The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. Happy April to you. Have a special treat. Amanda's going to be joining us after I do a review. How's everyone doing today? Hi, Nick. Everyone doing all right? Okay, so I think this is a pretty critical week in the dollar. I'm taking a contrarian stance here. I put out a tweet after Mark Have showed a pitchfork and asked him if close over 97.80 was going to change a picture for him. And then I got responses that even Charlie Brown knows we're going to get to 97.80. Okay, so with the euro at 16, even though it still could flush to new lows, and the pound having everything but a full Brexit priced in, at least the fears of it. If you, as you can see, so far we failed from the 78.6 retrace of the fall from the Fed. Okay, so I'm looking at this as, oh, yeah, Amanda's getting ready on the side. She's on the side of the stage, banging her head against the wall. She was a punk rocker from the UK, and it's going to be great, Amanda. So potentially we get a third drive here, one more shot up towards 97.48, maybe 88.6 back. But this is really the key to me in the dollar, getting back through 96.5. You guys remember that a few weeks ago, the line in the sand was 96. Okay. Okay. And then since we've had this advance, to me, 96.5, you could move it up to where, you don't have to wait for 96 to know that there might be something else going on. So you that 650, 660 level, where these two moving averages converge, I think is going to be a sign that there's a potential retest of this. So this is key to me, this 97.50, 96.70 in the dollar. I'm thinking because of the way the market is positioned, pretty bullish a dollar, that this would be the bigger surprise, taking out this low before we take out this high. So you don't have to agree with me, but give me why if you're with me and understand my rationale. Also, there is some divergences developing on this rally here. Okay, we're not confirming here. This was drive two, so if we get another one, and it's okay with me if it doesn't, I'm already there, but I'm prepared, as I've learned from Steve Volge, how to piece in, piece out, up here around 97.40, just draw a line here for a third drive. But that's my view on the dollar. Also, you know what else stands out to me, Face, on April Fool's Day? With risk on being pretty severe here, I'm really not impressed with the yen being up 13 pips on the day from a decent close on Friday. So, it is possible that this isn't the low in the end, especially if this is going to be a failing rally in the S&Ps. There's the S&Ps. So we're almost above these highs before that real bad Friday. And I don't know where we're going to go. We could top in here after taking the highs out. And the last thing I want to talk about is I was waiting for this, and I think it has to turn down this week. We haven't quite gotten to the 4-hour line. Looks like it's 61.03, towing the water in crude, looking for a failure in crude. So if I'm wrong about crude, then I'm probably wrong about the S&Ps. But I look at S&Ps up 20 handles and crude up 68 cents. To me, almost seems a little bit muted in the crude. So that's the way I'm looking at things going into this week. Any questions on anything after that? So I'm betting that the dollar falls. Of course, I'm wrong on a close that's over 97.80. Then you have to reverse up there because we're going to 99.20 to 102. Everyone clear on that? But watch at 9660 level. And with that being said, Amanda, we've been, Face has their 2nd-year anniversary. So what a nice thing for you to do to come out on our anniversary and address the community. So Amanda Blake Morrow, are you there?
you, you try to pull an April Fool's joke on our
Yeah.
subscribers and our listeners, and it just it was a good try. It was a good try.
Well, I mean, they're seeing Amanda's Skype saying,
the day that we get that woman on this webinar is going to be something. So
Yeah.
unfortunately,
once in a blue moon, but there are blue moons, bro.
There are
in a month.
There really are. I mean, it's at some point we're going to get her on, and unfortunately, on an April Fool's Day, she is not coming on.
Oh, and Blake, I just want to let you know that I turned down an offer to anchor on CNBC.
Oh,
to stay
we would have
been happy.
No,
go.
That's like, dude, are you stupid?
Huh?
Are you stupid? What are you doing here?
No.
Blake.
Well, yes. They wouldn't let me. Hey, Steve, they wouldn't let me anchor in a bathrobe.
I have a plan for Amanda when she visits Greece. Summertime or whenever it is, we're gonna get her drunk and get her on the webinar. Okay.
That's that nothing like day drinking and doing a little FX trading. That's great. Yeah,
Steve is sharing his dating strategies from his past.
Oh, wow.
Absolutely not. I'm gonna be the last in the list to include alcohol in any kind of tactics. Trust me about it.
Yeah.
Well, it was a good try, everyone. It was a good try, but well, yeah. So good try.
Yeah. Anyway, okay.
All right. So as far as today goes, we're going into a pretty important week. We have obviously non-farm payrolls this week. We have the RBA tonight. We have, a lot of good data. We have retail sales today. It's going to be a fairly important day for the market. I've noticed a lot of the traders in our chat room trying to pick up the euro down here, which, I'm a little hesitant to try to buy the euro here. And I know Dale, you're saying I expect the dollar to turn lower. I'm not so convinced at this point.
I'm always expecting when I take a trade, but I also know where I'm wrong. You know what I mean? So, and it's a Dixie because I don't know how to trade between cable and euro because of all the tape bombs in the pound. So that's why I'm going to the dollar index so I don't blow a trade selection. You know what I mean?
And I understand that, and that if you wanted to be long the euro, where you're wrong. I mean, it's a pretty straightforward trade if you want to take the risk down here. I mean, look, we've been range bound for months, like 5, 6, 7 months now. Since November, October. I mean, this is a unprecedented amount of low volatility. And is today going to be the day that we break out? Probably doubtful. So buying the euro down here does make sense. I mean, if I was going to buy the euro personally, I wouldn't do it until it dipped below it dipped its toe below 112. Like if it dipped below 112 and it popped back up again, I would consider going long, because then I could really manage my risk well. Because from here, you still have a 50 pip, maybe even a little bit more risk at this point. Especially we have retail sales today. How about if the retail sales numbers are stronger and the euro dollar, dips down towards 112? So, I get what everybody's doing, and it's not, it's not like I understand the thought process behind it. I'm not convinced at this stage in the game that's the right trade. Like I said, I'll wait for the euro dollar to dip below 112, and whoops, let me go ahead and reset that. I'll look for the dollar to dip below 112 and see how it reacts down here. If it does, and it may not even do it. I mean, that's the fact of the matter, is that we may just end up holding above 112 and never seeing the light of day below 112. So again, I understand. Now the cable is rallying, and we're pushing right back up into the underside of this trend line. Now, from what I understand, and unfortunately, I was doing some reading on the RBA tonight. I wasn't paying so much attention to what's happening in the pound. From what I understand, there's another vote today, and maybe Steve or Stelios is listening in, and they've got a little information.
Why are you questioning the fact that there's another vote? I mean,
because there's been 1,000 votes. Why not add another one? So is there another vote today?
There will be at least 2 per day from this point on to make it even more interesting.
Yes.
So
I wish it was an April Fool's, but it's not. And there are going to be more indicative votes on various things, from withdrawal. From a customs union to another referendum. Again and again, they seem to be voting until they get the result they want, which is not really democracy. But anyway, I mean, who am I to judge?
Right. It's, we're just going to continuously keep voting until we get the results that we want. I don't get it. And that's why I'm not even dealing with the cable right now. I'm really not. And I'm gonna go with Amanda's thought process. Until the DUP supports any type of exit plan regarding Brexit, I'm not buying the cable anymore. I'm just not going to do it. I mean, there's going to be, I'm sure there's going to be spikes higher like there are right now, and we're going to push right into resistance. But something's probably going to reject us up here. And like I said, unless the DUP starts backing a plan, I'm not falling for it. I'm not going to be suckering myself into getting long down here. I'm just not doing it. I'd rather buy a breakout knowing why I'm buying a breakout versus just assuming that something's going to happen and trying to find some levels to be buying the cable at this point. So I am leaving the cable alone. And thanks for the update, Stelios, because I heard there was another vote. I'm like, what? More votes? So I'm not even touching it. But anyway, that's where the cable's at. I mean, and if you're a seller of the pound and you're like, well, the UK it's gonna be a hard Brexit, and there's no way they're going to leave with the deal, then this is your place that you want to be selling the pound. I would assume, you want to find levels here at the 130, 150 to be on the short side. That's not the way I'm playing the cable. I'm not playing it at all. I'm just saying that I could see the reasoning for being on the short side, technically, at least for the cable. Let's talk a little bit about Australia. So the Aussie, we're in obviously a very tight range. You can almost I should remove this like support zone here. Let's delete that for a moment, and let's do something like this. You can look at the Aussie as being, in some sort of like triangle consolidation, and we're right up against, resistance, at least right now. And we're pushed up against that. And then we have this, falling trend line that comes into play, like right around the 7150. It's like right around here. Okay. The RBA meets tonight. And, I was just reading just before the webinar started, I was reading Citigroup's write up on Australia and the RBA and what their thoughts were regarding the Aussie, and they're expecting that because all these global central banks are starting to are starting to talk about global, this global slowdown, and even the RBNZ, it gives the RBA a little bit more leeway to be dovish and continue to be dovish. But the risks I feel, and I felt this from the last week, and I think I mentioned it over the week ahead video yesterday, is that the fact of the matter is the RBA has already been dovish. The market's been extremely bearish, the Aussie. And if the RBA doesn't come through with some sort of dovish statements or something that's more dovish or doesn't meet the market's expectations, because I think the bar is pretty low. And if they cite anything that's at all hawkish or just not as dovish as the market wants, the Aussie could squeeze. And then
maybe that, Blake, maybe that would provide a nice break to buy Aussie Kiwi. Are you looking to buy some weakness? Maybe, just like the New Zealand bank made it work, maybe this gives another entry down there around 103.70 or something like that.
Well, yeah. Here's the thing: is I already own some Aussie New Zealand, and I just want to be more aggressively long Aussie New Zealand. So
if they do what you said and Aussie pops, that could create. Oh no, that would make it continue. So
so we already got the confirmation that the RBNZ is dovish, and that was not the expectations of the market last week, obviously, and that's why the Kiwi.
That was the call of the month, man.
Well, it did make my month, actually.
I thought so.
Yeah, and month's over now, so now it's a new month. But now
you're only as good as your last month.
You're only as good as your last trade is how it works. But unfortunately. But you look at the market right now, and the Aussie New Zealand is prepared for another move higher if the RBA is more or just less dovish than the market's expecting. And that's all we need really for the Aussie New Zealand to play ball. Now, again, one of the other situations here is if you have China and the U.S. put together some sort of trade deal, some sort of concessions on China's part, then what you're going to have is an Aussie dollar that's going to outperform the New Zealand dollar. And I think that's going to be because you can see how bearish the Aussie New Zealand has been, in the onset of this China-U.S. trade war. And the Aussies just been beaten down. So I think the risk now is that we start breaking higher, and I'm ready to add to the Aussie New Zealand longs, following today. So we'll see what happens there. Now the Kiwi has had a bounce to the 38% retracement. If the New Zealand is going to fail here. If the New Zealand dollar is going to fail, it's going to fail somewhere around here, more than likely. Now, remember, equity markets are stronger. They are up this morning. The Kiwi dollar is up, 20 some odd pips. As a result, you had strong China PMI numbers, that came out over the weekend. That's helped both the Aussie and the Kiwi a little bit higher. The Aussies obviously doing a little bit better than the Kiwi. But if the Kiwi stalls here, then I think the risk is, you eventually break below this triangle support. So I'm one of the things that's going to really confirm me being long the Aussie New Zealand is if the Kiwi dollar actually, makes a break below this, below that trend line and in a new trend low. So I'm watching the Kiwi very closely here, how we react at this 68, roughly 68.35, maybe about 10 pips higher than where we're currently trading. The Canadian, I'm not trading it. I was expecting a move higher, but unfortunately the data in Canada on Friday, the GDP data was much stronger than expected, and so I just I kind of scratched that trade. I had a small position on. It was really tight stop, got stopped out, and said, I'm just not even going to deal with it. I don't even know what to do with the dollar Canadian at this point. Not with with crude oil as strong as it is. I wouldn't mind buying the dollar Canadian, but right now we have a little double top, so it's still this move right here. You can see the little double top here. Here's your neckline, and there's still some downside in the dollar Canadian, to be had. So maybe a dip down to 133 might offer a better opportunity to be long, if for those of you that are looking for longs, which could also be like some sort of triangle pattern. So you could possibly get a dip down here to be on the long side of the dollar Canadian, if that's how you want to play it. I'm not playing it right now, because risk appetite is so strong. The dollar Mex is weaker now. One of the reasons why the dollar Mexican peso was moving higher on Friday, and it was moving past the 1940 1943, 1945 level, and through this trend line, and it actually closed stronger. Is Donald Trump was suggesting that we could actually close the U.S. Mexico trade the border. And that was some threats that came at the end of week last week. Obviously, the market's kind of, dismissed that, but I think it might still be a risk moving forward. So I'm not trading the peso right now, but I think maybe a dip down towards 1920 here might offer a better opportunity if you wanted to be on the long side for an eventual break, above this trend line. I think playing it down here might be the better play at this point. I'm going to see how it does down at 1920. That would be what I'm thinking about doing. The U.S. dollar, South African rand is, by the way, is come under pressure. A lot of these emerging market currencies, not just the peso, it's the rand. The Turkish lira is a little bit stronger too. With Dow futures up about 150. No, they're up 201 points right now. So with stocks set to open stronger today, these emerging market currencies are looking a little bit better. The dollar Swiss, there's nothing to do with the dollar Swiss right now. Nada. Yes, we had a failure up here a couple of weeks ago. It was a good short at 101. I did short the dollar Swiss. Didn't make very much money. I didn't capture too much of this, but that was the trade with the Swissy. There's nothing to do right at this moment in time.
The rebound looks awfully corrective, though, right?
Yeah, it does.
It doesn't have any effects.
No, it doesn't. It looks very, you're right.
Even see, like a flag or even a flat top triangle or a wedge, depends on how you draw it.
Yeah, some like this, it is definitely doesn't look too, it's not a healthy balance. But the only way that we're going to play, to the downside here, and the only way you're going to see, you have to have the euro rally. You have to see maybe some risk aversion come in, and the Swiss come under some buying pressure as a result. But obviously with stocks as high as they are right now, or moving higher, it's hard to the market to muster too much Swiss demand at this point. And that goes same with the yen. You got the dollar yen. And by the way, the dollar yen actually rejected the 618 retracement overnight. Last week, I was looking for a move up to the 618 to be on the short side of the dollar yen. I did not have an order out. Over the weekend to sell the dollar yen at 111.20, which I'm a little bummed out that I didn't. I was at a movie last night, and I frankly didn't really even look at the markets. I looked at the Aussie New Zealand, said, "Oh, it's not moving," and then I continued on with my Sunday. But I should have been selling the dollar yen last night, is what I should have been doing, and I just didn't even think about it. But anyway, while we're below this 111.20 level, I think this is your risk if you want to be on the short side of the dollar yen. Now, just in a few minutes, we have retail sales coming out, so you want to be a little careful, because if the retail sales numbers come in a little bit stronger, dollar yen could spike back up towards 111 and change. But being on the short side of the dollar yen, like if we get to 111.10 again overnight, I'm talking about today's session, I might actually look to take the dollar yen on the short side. But I'm not trading it right now. It's just something that I'm considering based on what we have going on. And one of the things that I wanted to mention before we bring Steve on is that with ForexAnalytix, one of the things that you guys have probably seen over the last year is the floundering cryptocurrency space. If you look at Bitcoin and Ethereum, and we've attempted to try to cover these cryptocurrencies over the last year, and trying to analyze cryptocurrencies in this space with this little volatility, it's been, it's been pretty challenging, and we pretty much feel that there's no interest in cryptocurrencies anymore. So what ForexAnalytix, and I'm happy to announce that we're going to start incorporating is marijuana stocks. So every Monday, starting next Monday, we're going to do Marijuana Monday. And on Marijuana Monday, we're going to start incorporating some of these, April Fools. Sorry. That's one on you guys.
My question is, why only Monday?
Man, we're gonna do marijuana.
I say let's leave Monday for the rest, and we do all the rest of the days marijuana.
Anyway, all right, guys, that was my best attempt at April Fools. So April Fools
scared me. I knocked over my phone.
All right, guys. Well, hey, everybody have a great trading session. I'm going to pass it over to Steve and Stelios and Coach. You guys have a great one.
Wow, man, Blake, have a good one.
All right. Yeah, man.
Okay, I'm not going to say
that really was good,
Yeah, the marijuana joke would go well with the Wendy.
It was better than the Amanda one, which everyone knew. What's yours today, Steve?
No, I can't tell the Wendy joke because it's PG-17, the least to say.
All right. So, how are you, buddy?
I'm good. How have you been?
Okay, bro. So
everything good during the weekend?
Yeah, Bello said we're the dopiest team on the net.
We're gonna be if we start doing marijuana stocks.
All right.
Okay.
So what do you think? Time to start maybe. I know you don't. Once in a while, you have a feeling. Time to start probing maybe the short side of crude up here.
We've talked about that, and they can briefly, have a look at it, and then let's leave Stelios give us some news, and then we have retail sales, and the retail sales, as you know, for this market are quite important.
Bob Lowe, is that you are you my guest today at True Charts? Is that your last name, Bob? If you could just write in the question box, hi Dale, I'll know it's you. All right, go ahead, Steve. Thank you.
Okay, so crude is probing the 127% extension here, Dale, and a little bit higher. As you see, we have once again this ascending trend line that has acted as resistance multiple times so far. So yeah, I do think that it's quite dangerous trying to catch some more upside price action because there is no risk reward to do so. I think the next decent move is to the downside and not to the upside, most likely. Than not. But we're going to have a better look at it. Stelio, what did we have so far today?
Okay,
we had some European PMIs or so, and they didn't look that pretty.
We actually started with a Chinese manufacturing PMI, which beat quite comfortably, and the Chinese numbers are slowly showing some signs of life. So let's see how they evolve. But the main one, you're quite right. We had European manufacturing PMI out of Germany, out of the Eurozone in total, Italy, France, they all missed. So this was not a very good thing, obviously. And the CPI also dropped to 1.4% year on year from 1.5%. So is nowhere near their target. And as you have said correctly, Steve, for some time now, the ECB have missed their chance. They're stuck at zero rates.
And they're going to stay there until the recession, as it seems. It's more likely now.
Yes. The interesting thing is that UK manufacturing PMI beat quite substantially.
52.5, right?
Yeah, but that's probably, Amanda said it, the other guys in the chat room said it's probably because they're stockpiling ahead of Brexit. So we shouldn't really put too much importance
reading into that. Yeah.
Or maybe not even the next one. The one after that is probably going to be the one showing what's really happening.
As a libertarian and a free market capitalist, I was thinking when Blake was asking once again about the vote, I was thinking that one good thing that might come out of it is that the parliament is so busy with Brexit that they're not doing anything else, which is usually a good thing because the vast majority of the cases that the government gets involved with something, it's just to regulate more or to or to put obstacles in place. So at least something good might come out of that.
Yeah.
By the
we
way,
had retail sales is weak.
retail sales.
Yeah,
Okay.
quite weak. It's negative, so that should be pushing the dollar lower.
Minus 0.2 versus 0.2 positive that was expected. So that's another bad signal for the economy, especially knowing that more than 70% of the US GDP is consumption. You don't want to see retail sales being on the negative. So probably that's gonna seal the rejection for the USD yen from the 111 area. Let's have a look at how let's go to the 4-hour chart. Let's see how stocks are responding.
USD yen is actually still supported from stocks, right? It's still unchanged on the day, which I find a bit strange. But
they were up about 30 at the highs still, which to me was still anemic with a 20 handle pop and the S&P.
Yeah, I totally agree with you, Coach. And I was also monitoring this little ascending channel that you see. This is what we drew at the end of last week.
I'm short exactly 1,000 right here, April Fools. I have a micro lot. All right. Anyway.
A nano lot.
You know what? You ever see the movie Achilles? I imagine I'm Brad Pips talking to his warriors every time I come in here. Pitt. Oh, I call him Brad Pips.
Yeah. Oh, it's okay. It's okay. An honest mistake for a trader, right?
By the way, Steve, revisions were higher, so maybe that's canceling out. Any right now.
Yeah. Net 2-month numbers slightly beat counting revisions. Retail sales ex autos and gas minus 0.6 with expected 0.3. So a little bit of a breakdown there.
We have some more data coming up.
That's definitely not going to help any bettering of expectations having to do with how the first quarter GDP is going to print. I'm sticking to my estimation that we might have less than 1% of first quarter GDP. I think it's very, very likely. And obviously, that's going to make the possibility of, reaching. By the way, Stelio, do you remember the other day that I asked you with the revision that we had in GDP, if we actually made
2.9? Yeah, you're right.
Yeah, 2.9. So we actually, this is the high watermark, in my opinion. So if Trump didn't manage to beat to get the 3% target or beat it this year, I think that's it. We're not going to see more than 2.9. I think it's downhill from here. Of course, we have to wait and see. But assuming that the first quarter GDP is going to come low, as the vast majority of the estimations are, then reaching a 3% target this year, seems almost impossible. Because we're going to be off to a bad start. Okay, so USD yen, since we already showed it. Stelio, did we have anything else, by the way, before I go into charts?
That is it, my friend.
Okay. Germany is still deep in contracting territory in PMIs, right? 47.5. How much is it?
Yeah, it was. Wait a minute. 44.1. So 44.
So that's really bad news for the Eurozone and the European Union and globally, to be honest. Now, you mentioned before, and I wanted to show this. You mentioned before, Stelio, that we had decent PMIs coming out from China, but really, who trusts that? I've been monitoring the Chinese PMIs. Every time we go below 50, miraculously, there is a jump above 50 afterwards. So there are two possible interpretations there. Either every time they go under, they stimulate more, or fudging the numbers, or a combination of the two. So regardless, though, the stocks don't care about that, and this is what I was seeing. Coach, I'm pretty sure you remember that we were talking about the possibility of a break higher from a breakout from this wedge, and we did get it, and we did get an impulsive move higher, and this is a textbook triangle, probably a fourth wave here. I mean, you can clearly count 3 waves, fourth with this, and this might be one last thrust higher before we see some type of a deeper correction, something like this can follow from there. So this is a nice breakout for the Shanghai Composite Index, and we are seeing more or less the equivalent price action in Australian stocks. So a nice wedge here, and we seem to be breaking out, which tells me that we have a decent chance of coming up and retesting this previous high there before we can have a deeper correction. So I think that both Australian and Chinese, you can also see it from the RSI. Just look at this RSI. RSI action to the downside looks corrective. We're breaking out from this trend line in the RSI. And for those of you that don't know, yes, you can do technical analysis on an RSI. It works just fine. And as you see, a similar price action here, a similar movement of the RSI, and a breakup from the RSI here. So I do think that this confirms that we're going to see a little bit more strength before likely lower. And this is a large capitalization ETF for China, not as bullish as the Shanghai Composite, but still we were talking about a possible breakout from this expanding triangle, and we did get that. We came down, we retested it, we broke higher, and we remained decently bid. So I do think that this looks, in the short term at least, good for the upside. And the emerging market ETF, one of the most popular ones, you can see here the same type of thing, corrective price action within the descending channel. We broke higher, we consolidating in an expanding triangle, and just look at this RSI. I think that the RSI is going to give us a nice signal when we're breaking higher, for at least one more move to the upside. So I wanted to start with those to get them out of the way. Now we can have a fast look at the DAX. DAX recovering more than I initially expected, but still we remain below 11,800 in 850. That's a super important zone for the bears to hold, and so far they have been doing so. So I wouldn't be jumping the gun being long unless we break above that zone. I think actually that it's a decent opportunity being short against that zone, and this is the FTSE 100, still a nice recovery within an ascending channel. 7,430, quite an interesting area of resistance. Below it, the 61.8 at 73.83. I would be careful with these two zones. I wouldn't be buying it up here. If we see some type of rejection there, that might open the door, for a deeper correction. So, I would be very, very cautious within this here. And this is the Nikkei. I have to admit that Nikkei in the short term looks like it wants to push higher once again. I mean, this looks like a triangle, so I wouldn't be surprised if we saw one more move towards the 61.8 from the Nikkei, and then some corrective price action following. Also, the RSI is showing us the same thing that we were seeing with, for the Australian and the Chinese stocks. So, corrective type of movement in the RSI, and we are probing the area above this trend line. Now, having to do with the S&P, obviously it remains very well bid. Let's go down to the 4-hour chart. I mean, we're back testing this previous high, the 88.6 from the all-time high is a little bit higher at 28.73 almost. What can I say here? I would still not be buying it no matter what. Still completely decoupled from reality. That doesn't mean anything, because that doesn't mean that we can go higher. You can trade the S&P using fundamentals. That's one thing is for sure, and that's it. So levels to monitor is the 28.72 as the next area of resistance. If we actually break above this high, and then 2900. I still expect that we're going to have some deeper pullback, even if it's a corrective price action, which is likely to be corrective because the move higher that we've had so far is quite strong. So any pullback should be corrective, but keep in mind we've moved again too far, too fast. This market is very, very erratic. I remind you that we had the second worst December in history, having to do with stocks last December, and now we had like the best quarter that we've had in many years in the first quarter. I do think that this is indicative that more volatility is about to follow. So I stick to my initial opinion. I don't think that we're going to see VIX going back to single digits. I do think that we should see an interesting year unfolding ahead of us, even if it means that we're going to spend a few more months, with stocks, just remaining elevated. But I don't think that the year is going to, resume like it started. I'm pretty confident about that. Here's the Nasdaq also about to probe the 88.6 in the previous high, so close to resistance as well here. Probably our friend Andre might have some kind of a harmonic here, a bat formation or whatever. Andre, if you have one, just throw it here. Let's go to FX. Let me start with the metals because we had some questions from what I've seen. So gold remains quite weak. I mean, we've had quite a nice move to the downside, and we're now consolidating. I have no idea if this consolidation is going to be some type of a triangle. It might be just like a simple zigzag. So we might go a little bit higher, retest this horizontal resistance area. But I expect that we should see at least one more leg to the downside following that. So I doubt it that it's going to be easy for gold to push above 1305, 1310, worst case scenario, before we see one more leg to the downside unfolding. So nothing has changed with that. And more or less the same deal here with silver. Silver, even if it recovers a little bit more from here, I think it should fail sooner rather than later and produce one more leg to the downside to at least come down and retest these broken rectangles trend line resistance as support here down at 1480 roughly. So gold and silver, that's the case. Now, having to do with, let's go to the daily chart, having to do with copper, unfortunately, I got fooled by copper. I said here that, the bullish thesis is still, strong as long as we're holding this bull flag. Unfortunately, I had a stop loss in place. I got stopped out when we probed below 287, and I actually, was quite afraid that might happen. But copper seems to be playing ball now. I mean, it seems to want to break out from this bull flag. So, my trade idea from Market Vision remains still true. We might see one more push to the upside for copper, at least towards the 61.8 at 302. If not, and I consider that more likely, towards the 315 area. Nice confluence of resistance is up at 315. And, after that, we might see some more weakness following. Look at the RSI, same deal like what we were seeing before. RSI is also confirming an attempt to break out from here. Platinum still consolidating within a larger channel, so nothing has changed here. And palladium rebounding, but pay attention here because we are now back testing an important area of support, this time as resistance. It's the 1400 area. That doesn't mean that we can make it above that, but I would be very, very careful because this move lower in palladium looks impulsive. So I do think that even if we don't get rejected from 1400, we might make it a little bit higher from there. We might, worst case scenario, we might retest this broken ascending channels support as resistance. and we should see more weakness towards 1265 afterwards. So I do think that palladium weakness is not over and done, and probably we should still be looking for entry areas to sell into this palladium rebound. So this concludes the metal recap as well. Let's go have a look how we're starting the week having to do with bonds. Bonds last week closed the week very, very strong. In all actuality, retesting the previous highs, which are not far away from the all-time highs. This is the price action we envisioned, quite some time ago. It almost played out like this. We didn't come all the way down to retest this broken channels resistance as support, but we came rather close to it, and we're now near the highs. So I do think that this was probably enough of a corrective move since we're almost at the highs. I doubt it that we're going to see more of a pullback from here. It looks like we should at least push higher once again. Now, targets to monitor. Usually, I prefer the 127% extension or the 161.8% extension. You can see them at 167.70 and 168.90. So I do think we can make it there before probably, seeing some type of a, bigger pullback. And, going to the ZN, the 10-year Treasury, a nice rejection so far from a previous area of interest. Barely made it above the 161.8% extension. You can, in essence, say that we got rejected from there. I mean, we did make it higher, but incrementally higher on a daily closing basis before going back down again. But I do think that most probably this pullback is corrective. The zones to watch is one of them is this one, 123.27, and the other one is this previous high that we had, 123.08. So I would be watching those, expecting probably more strength coming from there. I see no reason to believe that some type of a bigger reversal has taken place here. Price action so far doesn't send me these kind of signals. So that this is one of the reasons why I would expect some weakness from stocks as well. Keep in mind that we've already seen. I saw this several days ago, but let's go ahead and overlap them once again. This is the 10-year yield, the US 10-year yield, and if we add to this, why isn't it working? Why aren't we getting? Should be getting the.
In the 30 years, much yields aren't popping back up as much as the short end, Steve. I noticed this weekend.
I'm
like
trying
the 30
to figure out. I'm trying to figure out, Coach, why the compare button doesn't work. Probably some
April Fools.
I don't know, but you use the compare button and you could either compare stuff or add another.
What do you want to compare it? Balloons?
I wanted to overlap the 10-year yield as I did like several days ago with the S&P to show that we have a huge. I mean, usually the 10-year yield and the S&P. I mean,
they run together.
They run together, and now we have a huge decoupling. Huge.
Okay.
So something has to give. Something has to give.
One of them's wrong, is what you're saying.
One of them is wrong, but even if both of them are somewhat wrong, right?
Yeah.
They both need to make a move for them to reconverge, right?
Right. Yeah.
Oh, by the way, here is. I asked for Andre, and he just put it in the company's chat. I asked him. It looked to me like a pattern or perfect Gartley. He says, "Yeah, sorry, I don't do harmonics." He said, "This is a perfect Gartley in the Nasdaq. This is the Nasdaq."
So he's
having a yeah. So he had a look at the short-term chart, and he says that this is a perfect Gartley. So the minimum target, if I remember well, is what he has noted here, the 38.2. But very often those can prove to be reversal patterns that will lead to bigger reversals. So this is a Gartley. And remind me, Andre, if a Gartley extends higher than the previous high, then we have a but. Remind me, because I'm a little bit,
Yeah.
I'm completely actually.
I remember. I forgot his saying.
Yeah, it will invalidate the pattern above that high. Yeah, but isn't there another pattern that prints if you have
if a Gartley fails, grab the bat or something?
Yeah.
That's what he said once.
Okay.
What's that expression, Andre?
Yeah, like crab bait, or I don't remember.
If the moth eats my clothes, what should I do?
Yeah, absolutely.
Get a new wardrobe.
Okay. So let's also have a look at the DXY, by the way. DXY so far finding resistance at the 78.6 of the previous move, but keep in mind, let me take you to the weekly chart in the DXY. This is the weekly picture of the DXY. So far, this looks like a flat top triangle. Usually these break to the upside. So I have to say once again, I wouldn't be fighting dollar strength here. Even the RSI, just look at the RSI. The RSI looks like it's been working off, overbought conditions. And it looks like,
how about this, Steve? How about, can't we kind of like have an ABC flat type where it goes back towards that 96, 95, 80, and then tries to go, just shake out the people under 95, 80, and then make a move to that high?
Sure. You know how markets are, don't you?
Yeah. I'm just saying sentiment. There's so many, like I said, everyone thinks the breakout's a layup. I'm thinking there's one shakeout so that the people who thought it was a layup ended up being stoned when they went up for the jump shot, which is a basketball, not a marijuana stock term, but basketball. If you go up and you take the shot and it's blocked, it's stuffed in your face, they call that, I stoned the guy.
Regardless, one thing is for sure. There must be serious stops placed above this 97, 70 area.
Yeah, there's one.
Yeah, so if for any reason we break above that, I do think that we should see an acceleration higher, at least in the short term. And the next area of resistance I have noted here is at 99. So in my opinion, a move above 97.70 should take us to 99 quite fast. Okay, so let me have a look at questions. What are your thoughts for the Aussie USD longer term? Looks to be a descending wedge on the weekly chart. Okay, let's have a look at the weekly chart since you mentioned it on the Aussie USD. So here it is. Aussie USD. Why do you think it's a descending wedge? It can be. I mean, it can be if we take into account this spike lower. It can be, but keep in mind that even if that's the case, we still have a decent width to play around with. So even if that's the case, longer term, and we do break higher in the longer term, right? We can still remain trapped in this range for quite longer. But I would agree with you. I already had that trend line on my weekly chart, as you saw. So yes, if at any point we break above this descending trend line, that's going to be something to pay attention to, unquestionably. But let's take it, 1 week at a time, right? We're still far away from doing something like that. If we do, yes, then there will be a decent chance that this is quite a bullish technical development, and we should act accordingly. But until that happens, I think we need to respect the downside, because so far, if we go back to the daily chart, so far this looks quite a lot like a corrective formation. You can see it here. And, I favor as a possibility a break lower. I mean, from a statistical perspective, I favor a break to the downside. And this is the trend line you were talking before. We saw it on the weekly. Here it is on the daily. So as you see, this trend line currently passes from 76 cents, a little bit more than 76 cents. So we have a decent distance from there. Okay. Now, as long as we remain below there, I think we need to respect the downside, especially given how the dollar index looks at the moment. Did you start today, guys? No, we started 2 years ago. I don't know the context of the question because it's some time ago. Nick says, Steve, maybe you could become a Rastafarian. Yeah, that would be the day. Brexit vote, yes, there will be a Brexit April Fool's Day. Yeah, I would agree with that. I mean, let's see that happen because I've gotten really bored of two things. Chinese, US-Chinese deal. We've been reading about it every day for, I don't even remember how many months, from last year for sure. And Brexit. I mean, let's finally get those things happening so we can move on to our lives, and get to back to worrying about what comes every single day, and not those things, knocking on our door day in, day out, again and again and again. Okay, now let's have a look at the cross rates, and then we can start our interview. So Euro-Aussie. Today, it gapped lower and it's probing below the area below this channel. If confirmed, this is going to be a bearish development for Euro-Aussie. So the next area of support is going to be at 156. So quite interesting to see how we're going to close today for the Euro-Aussie. And Euro-Kiwi, not breaking down, but keep in mind that we had a very nice, I wrote that on the end of week analysis, we got a very nice rejection from this descending channel once again. So as long as we remain within this channel, you have to maintain a bearish view. So especially if Euro-Aussie also closes below that channel, it means that both of them definitely still have the downside as the path of least resistance. Okay, EuroCAD, as you see, we expected some kind of a rebound from there. We got it, but this rebound has failed. So EuroCAD is definitely quite choppy and not good looking, but I can't say that there is any momentum here. We saw a rebound, and this rebound miserably failed. You can even call this, if you look shorter term, as a double top, which has now been triggered, which would point once again to a retest of this previous low. So this doesn't look bullish either. It looks more bearish than anything else. And let's go to the pound Aussie, pound Kiwi, pound CAD. Pound Aussie, as you see, it's making an attempt to retest this horizontal support resistance area at 184.40. But we have now closed below this ascending channel, and that is definitely not a bullish development. Pound Kiwi in a choppy consolidation, still within an ascending channel. I would be paying close attention to 189. 189 actually, a break below 189 would confirm a bearish development. This rebound higher, if you look at it by zooming out, it doesn't look impulsive in any way anyhow. So I wouldn't be surprised to see at least a move lower to retest this larger channel support, which currently passes from 183.80, let's say. So we have quite a lot of room to move to the downside if we break below this inner channel. So all of them look more bearish than bullish at the moment, or anyhow they have bearish potential. Pound CAD once again rejected from this ascending trend line resistance. So even if we remain within this expanding formation, this expanding triangle, there is still a lot of room to the downside. So the risk reward probably favors shorts, if anything. So I think that this concludes the close as well, and we are at the top of the hour. Your guest is here. We'll be back tomorrow with no April Fool jokes. Coach?
Thank God. Yeah. All right. Anyway, I think April, but there is something I think that no one else has mentioned that is significant in April.
What is
Can
that?
you guess? Yes.
Yes. My son's birthday in 5 days.
Okay. Well, I want to sing happy birthday to Jason, but it's also Face's second birthday.
That is very true. Do you remember the exact date? Although I can go back and find it.
April 3rd, 2nd, 4th, first week of April.
Yeah, it was the beginning. True. It was the beginning. So
anyway,
happy
I hope
birthday to
that
us.
we've added value to the FX community out there in the last couple of years.
I think, Coach, a testament to that is our following in the webinar. I mean, and how many hundreds of people we have every single day here. So yeah. I'm pretty sure that you've done a wonderful job. By the way, Coach, I found it. April the 3rd was a Monday, so most probably that was this is our birthday, April the 3rd. I can go back to the recordings and confirm, but it's most probably April the 3rd.
All right. Well, happy birthday to Face. Happy birthday to Face. It is the best place to become a trading ace in Face. Happy birthday. Anyone becoming and sell crude, Umar. Anyway, okay, let's go to Bob. So thank you, Steve. Let's have a great week, a great April. And I have confidence that's going to happen. So Bob, I'm going to make you the presenter and welcome you to our community. Welcome to Face on our second anniversary.
Oh, thank you and congratulations. Can you hear me okay?
Yeah, I can hear you loud and clear, Bob. How are you?
I'm doing okay. How about yourself?
Good. Very nice to meet you. And I see your screen, and we're looking at SPX. But before we get to the markets, buddy, I'm always interested in people's journey and how they get to point A to point B. Just like the markets, you could have straight line moves. You could have a market that takes a long time to base and or failures and everything. The market's kind of a metaphor for life. Tell us a little bit about what you were doing before you got involved and how you did. What was your introduction to the trading business?
So it's been a pretty long journey for me, and I found that being naive is much better than being knowledgeable.
That's great. Yeah, okay. You know why I agree with you? Because anyone that rode Bitcoin, anyone that could stay with a parabolic move,
right?
You almost have to be naive to be holding it because you get a market doubles or triples and you're grateful instead of 30 times. So you have to be naive or greedy. Is that your point?
Yeah. So basically what happened was, so my journey started was I was looking at opportunities on how to make money. And I was like, hey, there's no better opportunity than to understand the markets. That's how I looked at it. Because you don't have to build a factory, you don't have to hire people, you just have to have your own brain. That's how I looked at it. And if you get good enough at it, you will figure out the right way to make money. And fortunately, I started during the right before the bubble era in 2000, 1999, 2000. And I had been trading and I said, hey, this is great. I'm going to start making money. And I did make a lot of money during that time. And then sure enough, as I was naive, I lost all of it. So I made actually over 20x my investment when I started. It was
I'm a believer, Bob, that we learn the most from our mistakes. And so really, what was the lesson that you came away with after you had tremendous success and then gave it back? What did you learn?
I think the key thing you have to learn is you have to be objective and you have to take emotion out of the equation. Every time I put emotion into my equation, I lose money.
And how do you accomplish that nowadays?
It's not easy. You have to let yourself break away from that. It's not easy. And I know that it's been tough for me sometimes, even though I may think about, oh, it's got to go the other way. And then I realized, nope, I made a mistake. You just take your loss and get out is the way to do it. You just define clearly your rules. The way you do it is you define rules. And if you
Right.
stick by your rules, you will make money. So that's how you have to learn. And you have to get good at technicals, because without technicals, it is just blind trading, is what I call it. There is no real trading happening if you're not looking at technicals.
Okay. Who
Mhm.
were you? Did you have influences in your technical trading, or would you call yourself self-taught?
Well, no, I did learn. I was reading quite a few books. I was reading about the stock market wizards. I read about
Mhm.
Vic the Trader. I was reading his books. I read about Charles Bukowski, who was the chart pattern master. He was an engineer who defined all the chart patterns. Some of these very, very big guys, I was reading their books and how they were using technicals. A lot of these guys were just trading S&P futures, right, a lot of times. But some guys were trading just stock and just got really good at it. I find that my forte is stocks, and I try to just stay with that because there's too much noise in the universe. You just got to focus on what you're good at. So try not to do too many things is the way I look at it, because you
Okay.
can get lost in the noise. So anyway, so that's what I did, and I've been trading for quite some time now. So
Okay. So tell us about your
uh,
proponent of MACD and RSI. How do you blend those two together?
so I look at not only that, but I look at also like the moving averages. Those are very, very critical to me. And I use this site, but actually I know that you see my moniker is basically under True Charts, right? It's because I developed my own site. It took me about a long time, and then we developed this, and we are currently revamping the site completely. My goal was intent was to figure out something quick and easy that I could use and be able to screen very, very quickly. So what we did was we actually created a stock chart pattern that was obviously by default would always show you your key indicators. It will always show your moving averages. It will show you the MACD, and it will always show you some other indicators that were by default set by the user. So why
Okay.
I look at MACD is, even though it looks deceptive, it's got certain characteristics that are very, very unique. And you can look here. This is a very on the S&P. Like basically, I'm looking at the S&P. You can see it was very excuse me. You can see this was I was saying buy here on Twitter. You can go check and say you can see that I said buy, and we can see this is a condition
Great
called
signal.
yeah, it was a very, 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 this is called a massive buy signal. And I'll tell you why. Because you have a deep MACD, you have the lowest MACD value and the lowest RSI value here. And then you see it just took off. And now what you're seeing is now you're seeing a sort of ABC sort of wave up to a 7 wave up move, basically. My estimate is that S&P has to go to about 290, 280, 287, 290 range. Here's the new old high. This high has to be tested, no matter how you will look at it. And
Okay.
I think from an asset perspective, allocation perspective, there is a lot of money chasing stocks because that's the only asset left over in the markets. Even though bonds are saying the opposite of what the market should be saying, right now people are just chasing stocks in anticipation that it's going to move lot higher. The second thing I think is the Fed. So just on a technical basis, just want to make one point here. You can see this MACD is trending down here like this. And this is a very characteristic thing. You'll have a move down and then you have a bounce, which is what we expect here. And you can see the RSI is also mimicking that, which should be expected sort of. It's nothing new here. But what you have to watch is you have to watch the selling. There's an indicator we use, actually, I like really very much, is the CMF, the Shaken Money Flow. And
Okay.
yeah, I
God, I
like
haven't
it.
heard that in a long time. I actually knew Chaikin.
Yeah, Chaikin is a very good indicator, and
Yeah.
it's little. It's not very late actually. It's typically actually pretty good in telling you when the selling is going on. So I've been using that as an indicator also in my overall default situations, basis conditions. So that's what I try to use. Now, one other thing you can see is on this, you can see as the MACD is looking here and the RSI. I also look at the moving averages. One of the things I found that works really, really well for me, I don't know why, is the 13-day moving average. Not the 10, not the 20, but the 13 works very, very well. And then on top of that, you have the 20 and the 50. So the 13, 20, and 50 are, I think, the machine programmed basically, and you can tell when the bounces are going to happen, especially the 50-day. I think if you run a strategy that says buy at 50-day average, you will make very, very successful. It's
Okay.
very obvious. Yes.
Okay, and you're saying all
Uh-huh.
these moving averages are kind of like programmed that everyone uses them, and that's why the markets respond to those areas?
Yes, I believe the algorithms are using those averages. Yes, and that's what's happening. Now, the other thing I want to quickly talk about is some of the stocks that we think are looking very, very strong. We expect, so at a high level, we think that the tech stocks are very susceptible because earnings seasons is coming up, and we think there'll be significant warnings from many, many tech stocks. I know you're seeing warnings from Micron. Also Samsung, which is the biggest semiconductor producer in the world. Even the Korean exports were down just because of semiconductor, because that's one of the biggest exports. Even they are saying they're seeing a slowdown. I've been also noticing there have been layoffs in the Bay Area. I live in California, and there have been layoffs at many companies recently. It's
Where?
because in
Semiconductor companies?
Yes.
Okay.
Yes. Intel just had a layoff, and I know some other companies that had some layoffs. So we think there is actually a slowdown, but the market doesn't think there is one, and we believe there is one coming. It's already, we are in it. It's not this coming, it's already we are in it. But I think the market's expectations are very, very high. So we think people need to be very, very careful of any tech stocks positions they take, and be very careful and puts very tight stops on their on their stocks.
Well,
So I
let
think
me
that
ask you this. So all the darlings, and I just can't get this out of my head. Before the break that we had late last year, I was listening to CNBC, and most of the averages were down except for NASDAQ. And one of the commentators said that people are buying the FANGs as a flight to quality trade. So I knew the FANGs were you buy the TED spread, right, or bonds for a flight to quality.
Exactly.
So are you seeing, and a lot of those stocks were broken with huge gaps, Facebook, a lot of them were broken.
Correct.
So are you seeing kind of negative action? I looked at, Amazon's not that impressive to me. I took a look at a few things over the weekend. Netflix has been one of the stronger ones. It doesn't look that great to me. I tried to look for a FANG stock that I would buy at these levels. I couldn't find one.
No, you're absolutely right. If here's Netflix, for example, right? It's a very expensive stock if you think about it, right? Its market cap is what, about 155 billion. There's right there. And its valuation is like 9 times sales. So very, very expensive stock. So that's where you have to be very careful. So there are certain stocks in the Dow I like. So I still like Caterpillar. I think that's a good stock to own.
Yeah.
And I expect in the earnings seasons, what you're going to see is you're going to see the healthcare stocks hold up much better than the tech stocks, because I anticipate that those are not being impacted by any slowdown. You see, healthcare is always going to be there. So we don't expect that to happen. But big name stocks such as Texas Instruments, Xilinx, which have run up so much, which I'm actually short Xilinx, by the way. So
is that a tech or a biotech?
It's a tech stock. Xilinx is a tech stock. Yes. You can see the run up here on this chart is very exponential.
Looks like it has one more high, like a 3 drive up there.
Correct. And then you can see its price to sales is 11. Semiconductor typical price to sales is between 3 to 5. It should never exceed 8, by the way. So this is 11. So this tells you it's a great short. And so we've been looking at this again.
So you're talking about a pretty much bifurcated market situation coming up here, Bob. So
correct.
Do you ever spread it, like, long Dow, short Qs, or anything like that?
Yes, I do. What I do is I will buy either healthcare stocks or buy REIT. REITs are holding up very, very well because of the treasury yields. So you're seeing the REITs are doing very, very well. And I think REITs is a good place to park your money. And even some big name healthcare stocks are a good place to park the money, to be, away from the volatility of the tech stocks, which I expect should get a lot of volatility because of earnings seasons upcoming. The other thing I think is basically this Lyft IPO was unique. I think that's why the market was manipulated to move higher.
Markets aren't manipulated, are they? It's a fair, you know, there aren't any loaded dice on this
I
crap table,
know,
are
I
there?
know, I know, exactly. You know,
All
there's
right.
loaded dice everywhere. You should watch that show, called Cheating Vegas. You should really watch that. Have you ever seen that show?
No, I haven't. I'll
You
check
got
it
to
out.
watch it.
All
You
right.
know what? I think they shut it down, but you should watch it anyway. But you
Okay.
can see the S&P. Like I said, I expect a move up here on the S&P, and because I think there's a lot of money allocation going on. You can see the trend is still up. The
Yeah.
50 is kind of 200. We still think there's a move up here. Probably on the what you'll see is the divergence, right? You'll see the RSI move down, but the market will move up. That's what we expect in the short term. You can see the
And
volume is
you're thinking like 29, 290 on the SPY.
290, 287 to 290 range is what I'm
Okay.
expecting. Yeah,
All
and
right.
I think we should watch that. The other thing I just want to share was basically on the diamonds. Also, we think the Dow Jones also is still going to move with the S&P as we expect. They're typically in tandem moving. So I would expect this also to move up to about 26,500 or 265 on basically on the DIA. So again, you have a lower trending RSI or sort of a divergence here, MACD, and then you'll see a move down is what we expect.
Well, actually, the last several days, the Dow's been the
Mm-hmm.
leader, the relative strength, right?
Correct.
So, I was taught if the generals are leading
Mm-hmm.
and the troops
Mm-hmm.
end up retreating, let's say,
Mm-hmm.
Qs,
Correct.
that the generals get slaughtered afterwards.
Yes, and I think this move up here was very significant of what I call a bear market rally because it was too V-shaped. So you can see that it was oversold and came back really, really fast. I
Yeah.
think there's, like I said, the resistance is going to be right about here. So I would not be surprised about 265. One other good thing I want to tell you guys. So just a pitch from my site, Dale. Basically is we are revamping our site. We are going to be introducing trading directly from our site. We are going to be working with a brokerage called Tradier, and we'll be doing that. We have some powerful screeners on our site. Please check those out. Have your users check those out, and your subscribers have them check it out and let me know. We'll give them some free time on the site. But overall,
Yeah,
I think.
you have any view on usually? Thanks for taking over the interview. But do you have any view on, say, for example, the oil sector with the rally we've had in energy?
I think oil is, I think it's very typical cyclically driven. So that summer is coming. So that oil tends to move higher right before summer. In springtime, it starts moving up. I still expect that oil will stay between 50 to 70 range because that's where Saudi Arabia makes a lot of money. So you can expect that there's a lot of, obviously, like you said, it's a loaded dice by itself because it's a cartel when we say don't have cartels. So it's a oxymoron in what I call it. But I expect energy.
Any view on miners, copper, etc.?
I actually like gold. I know your earlier presenter was saying gold may trend down. I think it's a short-term trend down, but I think gold is a very good hedge against any sort of big moves coming in the market later. I think if you look at
price
gold,
sensitive on that, or do you just what coin
well,
brokers say? Don't wait to buy gold. Buy gold and wait.
I'm very price sensitive. So I think anywhere below 1250, I would look to buy.
Okay.
And I would buy there, and I think my target is actually 1600 is where I think gold has to go. It has to break 1350, which is a very high resistance area, and I've been buying gold since 2000. So if you think about it, you have 600% from that date, right? So
yeah, 200 was went to 200 was the low.
Yes, and I'd bought it, and I was telling everybody buy gold, buy gold, buy gold. Nobody wanted. So
I remember that too. They were saying, "Well, it's an archaic relic and it doesn't work anymore." Kind of like what they're saying about the VIX now.
Yes, and that's why
VIX doesn't work.
Exactly,
because it hasn't. Yeah. So what a pleasure to meet you, Bob. And,
hey, thank you, Dale. Sorry, I did not take over your interview. Sorry about that.
It's all right. Now you show your website and give the website address, and people can follow you, Bob, on Twitter at True Charts.
Yes,
that's a great handle. I like that, and
I appreciate that. Thank you. Yeah. So we
came up. I'm in California too, buddy. Where are you?
I'm in San Jose, Bay Area, basically, Northern California.
Okay. Yeah,
how about yourself?
San Diego.
North
County,
Diego.
San Diego
Oh, okay. I used to work there in
Charles
San
Gads,
Diego. Oh,
San
okay.
Marcos. Yeah.
Oh, cool. Oh, excellent, excellent. I
Yeah.
need to drop by when I'm down there. I should give you a call.
Okay. All right.
Yeah.
And we could, talk
Uh-huh.
about charts on the beach and get sand on our,
Sounds like a plan. I
what
love
do you
it.
think? All right.
I love it.
So
Uh-huh.
Bob, really, thank you for sharing your views.
Thank you
I'm
again.
glad I met you, and like it or not, you're now
Same
my
here.
trading warrior brother.
Hey, same here. You too. Same from our side
Uh,
too. Thanks again.
You're very welcome, everyone. That's Bob at True Charts, looking for about 2,900 in the SPY, and saying be careful in tech. I concur with that. Doesn't mean that it's right just because I concur, but I do concur with that. So, Bob, good hunting. My hope is that pips rain down on you and
Thank you.
everyone who follows your work.
Thank
Okay,
you so
buddy.
much. Thank you,
You're
my
very
friend.
welcome.
You have a great day. Thanks again.
I was only kidding. April Fools. I hope they rain down on me. No, I know. On everybody. All right, Bob.
Everybody.
Really
All right.
nice
Take care.
meeting you.
Nice to
And
meet you too.
good hunting this week. Everyone, that's a wrap for Monday. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Thanks for hanging out with us on our anniversary week, 2 years out there. Our mission statement is to build up and edify traders every day. See you
Okay.
tomorrow.
See you
All right,
tomorrow.
Bob. Thank you
Bye.
again, buddy. Adios.